Hey, do you want to get rich quick in the stock market? Well, in this video, I'm going to show you how to get returns like me, and I get returns like this. If you want to get returns like this, stick around in this video because I'm going to show you exactly how I did that. Hey friends, welcome back. Today I'm going to show you the graveyard, the skeletons in my closet, a couple of the investments that aren't going well for me right now, and what I'm thinking about doing with those. So I'm going to show you my TFSA, which is equivalent to a Roth IRA for my American friends, and the margin account that I've kind of got a few stock holdings in, and I kind of sort of forgot about those because I've just been so busy trying to make videos and doing a few other things. So the point of all of this is really to show you two things. One, that I make mistakes. Two, I'm learning. And two, to give you some takeaways at the end for, you know, what you can do to avoid some of this stuff happening to you. And also at the same time, what's kind of saved me. So let's just start with my TFSA. All right, so just showing you the overall stats here of the account. Overall, over the many years that I've had this account, the account is actually up. So that's a good thing. But let's get into the many holdings that I have. I have 16 holdings in this account, which is way more than I am used to or probably would ever want to track. But I did make some good moves in 2020. So in March, when everything dipped, I pulled together a little bit of cash that I had and actually bought some Canadian telecom and bank companies. Now, Bell I did have from before, but Bank of Nova Scotia, CIBC, Canadian Western Bank, I bought all of those. And as you can see, CIBC and Canadian Western Bank did really well for me. Scrolling down, I also bought some TELUS because that's a very reliable telecom company that also pays dividends. So along with Bell, I was trying to make a little bit of a dividend portfolio, start a position in dividends to be able to make some cash flow for this account because it is capped at $6,000 a year. So this would allow some extra cash to flow through. Now, here is where things get a little bit crazy. Now, you guys might remember I got pretty excited about Airbnb and what was going to happen with that IPO. Well, I actually put together $10K in this account to try and buy some Airbnb stock in my Roth IRA, my TFSA, because that's how confident I was that it was going to be a good buy. Well, when the IPO happened and the price spiked and I didn't agree with the evaluation, I actually held on to that money, which wasn't a bad thing in itself. But then I kind of had it burning a hole in my pocket. And pretty soon after that, I'm listening to other YouTubers and I'm trying to figure out what would be a good buy. And I did a little bit of analysis, but to be honest, didn't do the same kind of evaluation for some of the companies that I went ahead and bought after. So this is where things kind of go off the rails. First up, I have Ajax, which is a SPAC. Ajax now is in a partnership with Kazoo, which luckily is something that I think is kind of exciting. But you can see here, lost about $300 on that one. But you know, I still have this in my portfolio because I do consider Kazoo to be kind of a cool business to be into. Now let's scroll down to Good Natured Foods. Now this is a company that actually, there's nothing really too much wrong with it, which is why I'm holding on to it. But you can see I'm down on my original investment. And there's not much that's wrong here, but this company continues to acquire other companies and build up kind of that sustainable food packaging business. So I'm holding on to it, but right now not looking like the best investment. And it's a little bit volatile because the stock is cheap. Innoviz Technology. This is where we start to get into some of the EV plays that I got interested in doing. Innoviz down about 55%. And I lost $280 on this one so far. And these guys just make LiDAR. Not really a big issue right now with the company. However, again, it was just overvalued when I bought it. And that was the thing that I kind of messed up here, is that I didn't evaluate the company with the same rigor I was evaluating Airbnb. And I made all these purchases kind of on the same day, and I really shouldn't have done that. FOMO definitely got to me here. Continuing with the EV thing, we've got NIO. This one's not too bad, still down 35%. Now, Romeo Power was probably my biggest failure here. I invested pretty heavily into it, and it's only come down. It was $45, it's now down to $5. It's essentially a super cheap stock, and while right now analysts consider this a buy, it's a buy at its current price and not where it was at the time. So with all the other EV stocks that got beat down, this one got beat down as well, and I lost almost $1,200 on that one. Still kind of hurts. The last EV company would be Lightning eMotors. This one I actually quite like still, so if I do free up some US dollars, I might still invest in ZEV, but I'm keeping this one for now. I think the company's still pretty solid. Just down with the rest of the stocks at the moment, but wasn't too bad because I didn't put too much money in here. I only lost a couple $100. but it's still down 51% from when I bought it. So that sector as a whole is down. Overall though, I do feel like EV companies are a good investment. Again, my mistake was just not evaluating these companies properly and FOMO getting the best of me. Well, what else do I got in here? I've got Lux, which is Newlox Gold. I did a video about this one. Still really excited about this company. It's, again, just a cheap stock, so it fluctuates a bit. I bought twice at an average of about 49 cents, but I'm slowly building a position into this one. So again, keeping that one around. And then a couple other things that I have in here are XQQ, which is my NASDAQ 100, holding on to that one. And I'm also building a little bit of a position with US dollars into the energy sector with VDE. And I think that one's down, but will kind of improve slightly in the next couple of years, short term. Last one you guys probably saw, part of the EV thing, was Tesla. I, of course, resisted buying this stock for almost 2 years. And when it broke the $800 mark, I decided to just go for it, scratch the itch and buy a couple of shares. And of course, it's tumbled ever since then and kind of recovered. It went down below the 600 mark. Now it's at 680. And so I paid for that one as well. Overall, my portfolio is down over $2,500 from that $10,000 that I initially invested. So not doing super hot, and you really have to sit and decide, is it worth keeping your money in this account, or do you cut your losses and put it in something that's going to bounce back faster than holding on to these? Now, the long-term vision for this account is actually get the individual stocks out of there. I got to put those in a margin account. And what I'd like to do is only buy ETFs and dividend stocks in here, ETFs that I think might outperform the S&P in the next couple of years, like short term. So that's why I'm thinking about energy, healthcare, and probably just more XQQ. Now I'll just jump into the margin account and just see how that's going. Now the margin account isn't so bad. If you guys can see, it's a little bit more of a YOLO account. I don't really buy specific amounts to rebalance anything in this portfolio. It's more just buying things that I think are a good deal at the time. And I buy any amount between 500 and 1,500 bucks. Depending on what I have available and how I think that company will do. And I just kind of hold on to them. You can see I made similar purchases in some banks here too. This was because it was where I had some cash at the time. And you can also see I made an Airbnb purchase, you know, scratching that itch. Just got one, which was good, but you know, just sort of serving my FOMO there as well. Switchback here was a SPAC play, but now they are buying Bird, which is the company that makes and rents those scooters, which I think is kind of cool. So I decided to keep those, even though most people sold this off when it wasn't going into the EV market. But I kept it because I think it might be doing well. And then finally, there's Danimer Scientific, which I featured on this channel. But while I still believe the company can go places, they have suffered a lot of class action lawsuits for misrepresenting their product during the pitch in the IPO. So that has really dragged the stock price down. But I think they're gonna get everything together here, and I will have to research this very closely though to see if I should sell and use the money somewhere else, or if this would actually come back. Now, a couple other holdings that are just worth noting. Facebook, almost 200% of what I bought here. I've had this the longest. I bought shortly after their IPO and just held on. Kraft Heinz I picked up when it was on its way down. I averaged it to $29 per share. Now it's up to 36, so that's done well for me, 25% gains there. And I'm thinking maybe now is a good time to sell to free up some cash, one of these two. And I actually have sold shares of Kraft when it was up at $39, $38. So overall, not too bad on this one, but a little bit of FOMO for sure with Airbnb and with Switchback, and you know, even doing the research on Danimer Scientific didn't guarantee me a good return, because how was I supposed to know that people would suspect them for misrepresenting themselves? So that just goes to show you, individual stocks can really feel like putting all your eggs in one basket sometimes. But enough about that, let's just talk about some of the takeaways of the way I set up these accounts and as to why all this stuff happened, but I was still able to sleep at night. Because guys, you gotta be able to sleep at night with your investments. You don't wanna stress out about this stuff. Now, some of the lessons to take away so that this doesn't happen to you, or what did we learn here? Well, first off, I am human, and I suffer from having emotions when I do investing. No matter how hard I try or how much I research, there is that little human element in here. And as much as I like to talk about companies and have plans put in place, I suffer from those emotions when trading sometimes, and I also lack the time to make the decisions I need to make, even though this is what I do on YouTube. Second thing was being conscious of what account I'm making these investments in. I made a couple purchases just because I happened to have cash in that particular account, and things quickly got super messy. My TFSA has way too many holdings in it than I'd probably like, and I probably should have just had all bank stocks and ETFs in the TFSA and then kept all individual stocks in a margin account. And that way, if things didn't pan out, I could at least claim a loss on the growth plays that I was trying to make. Third is keep in mind that stocks are like friends, and you kind of have to maintain a relationship with friends every once in a while. And the more friends you have, the more time you're going to be devoting to maintaining those friendships. Stocks are the same way, and if you have too many companies, too many holdings, and you have to stay on top of them all, it's going to eat up a lot of your time every quarter, going through the quarterly reports, making sure they're staying on track. That is what you have to do to be successful as a stock investor, and you got to stay on top of the news for all these companies. So keeping them to a smaller number will free up some of your time to do the rest of life and go out and enjoy yourself. Fourth is just to do your own research, and it sounds like a disclaimer because it is. I'm a YouTuber who's interested in this stuff, but I'm not an expert and I don't know what your situation is, so definitely go in, understand the company, understand your own risk tolerance, and then make purchases accordingly. One thing that kind of saved me or helped me sleep at night every time I get an email that some company lost 10% of its stock price that day is that I bought a few different companies and I didn't buy more than a few $100s other than Romeo into any one company. So yeah, I took a loss, but it was only a few $100 here and there. I didn't invest thousands upon thousands of dollars into one company like I was planning to on Airbnb. And so if you're wondering if now is the right time to buy into something, think about just dollar cost averaging into that stock over a few weeks rather than just buying it all at once if you're not sure. So that's what I did. That way I didn't get too invested into any one when I saw the stock change direction, and I didn't feel too bad when I lost a little bit of money on it. And finally, the biggest thing is definitely make ETFs your friend. Overall, my portfolio is up because the ETF is a huge part of my holding. Almost 90% of my portfolio in my TFSA is ETFs. It's the other 10% that are stocks, and keeping the percentage big of the ETFs, especially S&P 500, wiped out any losses that I had with these small stocks. So I kind of knew that I was doing something a little bit risky for me, and that is why I kept the ratios this way. And overall, my account has grown, even though I made some not so great individual stock decisions. And I think that's the biggest takeaway that I have from this whole experience. But I hope you appreciate the transparency here. I know not a lot of YouTubers will show you when they're doing things the wrong way. I have a few, stocks that have done well, as you can see, and usually they're the ones that I've researched for a long time, that I'm comfortable with when they go down, and that I hold onto for long periods of time. When I have that mentality of like wanting to make short-term gains is usually when I fail with my stock purchases. So take that away. I hope this has helped you. My next video is going to be a little bit different, so keep an eye out for that. Remember to hit the subscribe button. I'm going to talk about the first 100K because a lot of people have been kind of interested in that video. But until then, have a great week, guys. Spread the wealth. I'll see you in the next one. Bye. Holding. Holy shit, this is incredible. The slowest website in the world, Questrade.